We got big IRS crypto news. First, the IRS tries to sneak in a secret rule around DeFi, but the crypto industry is suing the hell out of them. And there's a safe harbor snapshot of your different wallets and exchange accounts that you need to be aware of before December 31st. I'll give you the details and what's happening there. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, let's start by taking a look at the price of Bitcoin, which continues to decrease, but still in a healthy pullback correction zone. No invalidation of the bull market. Bitcoin right now at the time of recording is at $93,425. So is this pullback finding its bottom? I still think it has more to go down. And I don't know if it's going to go all the way down to 80K. That is something I have as a thesis that it could go down and test that price point before bouncing. And it's certainly possible, but Bitcoin may not do that. It could go down and test 90K and then bounce from there. So this is a very healthy pullback and correction, and we really have to be patient here. On the monthly chart, though, when you zoom out, when in doubt, zoom out, it's nothing to worry about. We've seen these market cycles play out throughout the bull market starting in 2023, guys. So this should not surprise us. Nothing goes up in a straight line. And some other factors we have to take into consideration is the seasonality. Remember at the beginning of September, we were all talking about, or at least I was sharing in my newsletter and on the podcast, that Q4 we would see a very strong rally. We would see really nice gains because seasonality comes into play. Now, it's not 100% exact, but this is what we've seen historically based on market cycles. And this is in line with the stock market. So Q4 was really good for Bitcoin and altcoins, right? We saw epic rallies. So we're having a cool down here. And typically what we've seen in the years following the halving, because 2024 was a halving year, the next year is incredible. Your portfolio explodes, right? Because we start entering into the final phase of the bull market. So let's talk about, like, say 2013, that was following the halving of 2012. Of course, 2017, that was following the halving of 2016. And of course, 2021, following the halving of 2020. And I expect the same thing to happen here. And it's not just because it must happen, but because there's macro factors, external factors that drive markets, like global liquidity. We know the governments are going to go back to quantitative easing. They're going to print money. They're going to do stimulus. And here today, we got a report that Janet Yellen says the U.S. will hit the debt ceiling mid-January, forcing Treasury to employ extraordinary measures. Folks, you know what that means. More money printing. Janet Yellen's going to deploy her war chest at the Treasury, and they're going to go back to quantitative easing. I've been telling you guys this since the beginning of 2023, right? You know I've been saying this. I've been on the record. It doesn't happen overnight. It doesn't happen in a matter of 6 months. It takes years. It's a process, just like they started quantitative tightening, raising rates, they stop buying securities, and they really take a lot of liquidity out of the market. Well, we're over the hill now. They're cutting rates. Janet Yellen's been doing liquidity injections, but they haven't gone back to full quantitative easing of printing and doing a lot more. So that's why I've been telling you guys, even throughout 2024, we're entering into the next boom cycle. Now, that doesn't mean there won't be corrections and black swan events and things that happen. But the point is, they have to keep the show going. The music cannot stop here or civilization will collapse. This is the fiat money system. Once you understand this, it helps you to invest confidently in assets. Now, there's variables and different factors that are involved in picking the right assets, obviously. But if you're putting your money into the stock market and crypto and so forth, you're going to do well. And especially on crypto, as Paul Tudor Jones said, Bitcoin and crypto is the fastest horse in the race. So guys, you know where things are going to go. There's going to be all types of news, war and this and that. And the one thing that really hammered home for me what these governments are all about was in 2020 when the pandemic happened and the markets crashed, right? Everything crashed. And then they fired up the money printing, and they printed more money than they ever did in the history of the United States. And not just them, different central banks around the world, but the point is they have to keep the show going. Pandemic, this and that, war, whatever it is, they will keep printing. This is why we allocate to assets to outpace that debasement and that inflation. So I hope you guys understand that. And this is one of the thesis of why I'm so bullish on this asset class, in addition to other things, that it is going to be part of the financial system, that everything will be running on blockchains and much more. But the underlying thesis is put your money into hard assets to help outpace the debasement and inflation. So seasonality wise, guys, I'm expecting January to be an okay month, not incredible, but I think the fireworks really start in February. If you look at past performance, and then gets really hot in March, and then what happens come April into May? Sell in May, go away. This is the market seasonality. We've seen it time and time again. And of course, it's going to be selling for tax time, right? So you have all these things that come into play. That doesn't mean bull market's going to be over, but you may have a bit of a consolidation pullback zone, just like we're having kind of right now, and then pick up late in summer and then into the next Q4. Now, I don't know if the bull market's going to go all the way there. We'll have to watch the different metrics. It could, playing out like 2017, where it went all the way up to December, or it tops out in November. It's hard to predict these things because we don't have a crystal ball. But this is why we look at different signals and indicators. I share this with you on the podcast. I shared it in my newsletter to help you guys understand where we're at and where we're headed. And if I see there are red flags like whales are selling, coins are going back on exchanges, in addition to other things like monthly RSI, the Bitcoin Pi cycle top indicator, and other signals, I'm going to start to position myself to sell. Okay, this thing's wrapping up sooner than expected. So this is where we have to pay close attention to the data, not our feelings or emotions. And Yellen is given a big signal here. They're ready to inject, right? And, Trump's going to come in and he's going to he's already embracing crypto, but he's going to make a big push. And I'm sure he's going to force the Fed to go back to QE. So this is how it works, guys. Republican or Democrat, they all do the same thing. All right, let's move into some news around the IRS. The US IRS finalizes controversial tax rule requiring DeFi brokers to collect user trading information. The finalized rule would mean that DeFi brokers will follow the same rules as brokers that handle securities, the US Treasury said on Friday. The rulemaking has drawn criticism from crypto industry participants who say crypto is different from traditional assets. Now, this is part two. They tried to sneak it in right before the end of the year. People are away on holiday. They figured, nobody's going to pay attention, right? But the industry actually dropped a lawsuit against them. So Jake Cherversky gave a quick summary here, saying the IRS has finalized the second half of its broker rule requiring most DeFi front ends to KYC users starting in 2027. This unlawful rule is the dying gasp of the anti-crypto army on its way out. That's Elizabeth Warren and a lot of the Biden administration. Jake says it must be struck down either by the courts or the incoming administration. When this rule was proposed, thousands of pages of comment letters were filed explaining why it exceeds IRS's statutory authority and violates the Constitution. This isn't what Congress meant by broker, nor what the founders meant in the Bill of Rights. Now, enter the DeFi Education Fund, the Blockchain Association, and the Texas Blockchain Council. Yes. And they filed a lawsuit against the IRS. So I love this. The industry's not sleeping, right? The IRS and the Treasury could have gotten away with this, but they dropped the lawsuit right away. So the headline here is industry fights back on final broker rule from the IRS. In order to protect DeFi and the digital asset industry more broadly, we sued the Treasury and IRS today, challenging their doomed rulemaking, which would essentially serve as a DeFi ban, so a de facto ban, right? Because there's no way that these DeFi platforms can comply. But once again, this is the workings of Elizabeth Warren and her cronies. So along with the Blockchain Association and the Texas Blockchain Council, we asserted claims that the rulemaking is in excess of agency's statutory authority, is a violation of the Administrative Procedure Act, the APA, and is unconstitutional. So I will be interviewing Amanda Tuminelli of the DeFi Education Fund this week to give you guys the details on this. I've had her on the podcast before, so stay tuned for that. It should be published by the end of the week. And I love that the industry went ahead and sued the IRS 24 hours after this was finalized. So this is amazing. Now, there's something else that's happening, guys. The deadline is December 31st, a couple of days from now. And this is the safe harbor and inventory snapshot. Now, tomorrow I'm going to have tax expert Clinton Donnelly on the podcast to talk about this. And I'll try to publish that Tuesday morning or even late tomorrow, just so you guys have the details. He's the CEO of Crypto Tax Audit. And the TLDR here is essentially you need to take a snapshot of all your wallet accounts, exchange accounts, hosted or self-hosted, and you have to timestamp it. This is really silly and a bit cumbersome, especially the timestamp part. So let me try my best to give you some details. And once again, I'll have Clinton on to talk about it. So Clinton tweeted out, crypto traders, take note. Here's a step-by-step guide to the safe harbor plan and inventory snapshot, your roadmap to compliance under the new 1099 DA reporting rules. What is the safe harbor plan? The safe harbor plan provides crypto traders a structured way to report their holdings when data gaps arise. Think of it as a safeguard that ensures compliance when minimizing IRS risks. Why does it matter? The new IRS 1099 DA rules require precise reporting of your crypto transactions. A safe harbor plan protects you if your records or exchange data are incomplete. Avoid hefty penalties. So essentially, you take a snapshot of all your wallets, once again, hosted or unhosted, by December 31st, and you got to timestamp it and keep it as a record. So pull all records from all exchanges and wallets, include detailed transaction history and balances. Don't forget cold wallets and staking accounts. So I'm going to have Clinton on to do this. I haven't done this in full transparency. So I'm hoping to get something done by the 31st. And once again, I'll get Clinton to explain the details here. It's just a bit of prep ahead of time, but it seems, once again, so cumbersome. This kind of seems ridiculous as well. The other factor is, if Trump comes into office, is he going to eliminate this, right? Will this even matter? So we'll have to wait and see. But for the sake of just playing it safe and not wanting problems with the IRS, I'm certainly going to try to do this. So I will ask him, how the hell do you timestamp this stuff? Do you have to upload it to some site, let them timestamp it or whatever it is? I think that's probably the easiest thing. But this is really ridiculous. And it seems like a bit of an overstep here, and I'll try to get the details as best as possible, guys, from Clinton. And what I'll do, I'll link to his blog post as well about this, so you guys can read it, and you can click on the link in the description to check it out. Now, guys, quick word from our sponsor, and that is BitGo, which is one of the top tier crypto custodians in the market. BitGo is used by many big exchanges and token projects. So Bitstamp Exchange uses them. Sweet, a token project, uses them. Pantera Capital, that's Dan Moorhead, a crypto hedge fund. 21 Shares, which issues Bitcoin and Ethereum ETFs, uses them. So they have a variety of services, wallet services, prime services, and much more. And recently they launched a retail platform where you can buy, sell, trade crypto, and of course stake your crypto. And of course you're getting top tier custody services. So this is really great. And they're doing a great promotion where they're giving away Bitcoin. So you can get a chance to win one whole Bitcoin per quarter. So if you'd like to learn more about BitGo, go to bitgo.com. Link will be in the description. Now, Volatility Shares files for Solana Futures ETF despite lack of Solana Futures products. So asset manager Volatility Shares has filed for an application for ETFs that would invest in Solana Futures contracts on CFTC regulated exchanges and offer 1x, 2x, and negative 1x leverage options. The filing comes even before any such Solana Futures products are available to trade. So I think they're trying to be ahead of the curve here, because Solana spot ETFs have been filed, but there's no futures market. And usually the SEC has approved a spot market ETF when there's a futures already in place. So they're trying to maybe get ahead of the curve here with the upcoming change in the administration, new SEC leadership, and much more. So very, very interesting move. So it says here, in a curious move, asset manager Volatility Shares has filed for 3 new ETFs that would gain exposure to Solana futures contracts offered on CFTC regulated exchanges. The fund's prospectus clarifies that the fund will invest in contracts that trade only on exchange registered with the CFTC, despite that neither such a product nor a spot Solana ETF currently exists. So interesting move here. Bloomberg ETF analyst Eric Balchunas said on X that this is wild. He says it's a good sign Solana futures are on the way, which arguably bodes well for the spot ETF approval odds. So, like I was saying, they're just trying to get ahead of it because they know the regime change is coming up, and there's going to be more favorability towards these different altcoin ETFs. So don't be surprised if something comes up for XRP and HBAR, which we've seen spot ETF applications being pushed through. So interesting stuff. Now, final news item here, Do Kwon is going to be extradited to the United States. Montenegro Justice Minister signs Do Kwon's extradition to the US. So this is another scammer that needs to go to jail, just like Alex Mashinsky, and they should probably be in the same cell as Sam Bankman-Fried. All these scammers, man. We don't want scammers in this industry. We want them to be weeded out, and we need the SEC, the CFTC, and these folks to do their job. I've often stated the SEC's mandate and job is to protect investors, but when we know they become corrupted at their core, very politically motivated, obviously under Gary Gensler, doing all kinds of nonsense, attacking good actors instead of stopping the bad actors, right? I don't think I need to go on about that, but this guy needs to go to jail. All of this stuff needs to be wrapped up and be put behind us, and we can move forward and let this market and asset class grow to the next level. TradFi is here. Crypto legislation is around the corner. It's definitely going to be passed in 2025. You got a pro-crypto president coming in, a pro-crypto Congress. So we got to put all this nonsense behind us and move forward to higher heights and higher prices as well. So guys, let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way you can support me is by subscribing to my free email newsletter on Substack. It's 100% free. Link will be in the description. Also, grab a copy of my book, Rethinking Crypto, The Crash of FTX and the Rise of Safer, Stronger Digital Assets. It's available in paperback and digital. You can grab a copy for yourself, grab a few copies for your friends and family who want to learn about crypto. And if you bought a copy already, please leave a rating and review. It will really help me out. Thank you guys. I appreciate you all, and I'll talk to you all later.